Hey everyone, Andy Tuttle here with the Tuttle Group at Fairway Mortgage. Hope you're doing well. Just wanted to give you the DFW Mortgage Market update. Again, remember we do this every week just to keep you up to date with what's happening in the market, how that affects interest rates, and how that may affect them going forward, so you have a good lock strategy, whether we're your lender or not. So hopefully this is helpful. This last week we had a pretty dense news week, and it ended with the jobs report. We also had Ben Bernanke speak to the Hill on Monday. We had the Fed meeting on Tuesday, and what we found through this is something we expected, which is no Fed hike happened, but probably continues to pressure them to do it in June. So we think that's probably going to happen at their next Fed meeting, but nothing happened with the Fed hike this time around. But the jobs report is really the big news of the week. And so what we saw was that jobs report came in well. 211,000 jobs created in April. Now, normally that would put a lot of pressure on the mortgage bonds, and you'd see rates worsen significantly. But because there were some downward revisions from the previous month, so it showed that there were less jobs created than originally estimated, and because even though the unemployment rate went down, we saw also hourly wages tick a little bit lower, and those revisions we think helped keep the bond market in a stable place. We also have shown that job creation over the last few years has ticked down as well. It was 250,000 jobs in 2015, I believe 187,000 jobs in 2016, and now we're trending year over year average 186. So we continue to trend down that way, and I think that is what helped bonds stay buoyed. But what's going to happen this week with a light trading week, it's really going to be focused more on the technical. So let's go to that real quick. So remember, this is a price chart. So the higher the price, the lower the rates. This is the live trading and mortgage-backed securities that you're watching. You can see that prices have come down slightly over the last few weeks. We now are below this pretty strong line, this Fibonacci line, and so if you're a conservative, this is not a bad place to go ahead and just lock in when you get a contract, because there is some overhead resistance here. If you're a little more aggressive and you want to see if you can play a little bit, knowing that you are going to risk some downward movement, this is your near support, which means you may not get a higher rate, but you may have to pay a little more to get the rate that you're getting today. If you want to risk that to watch you float, we are in a carefully floating stance technically, but again, if you're conservative, this is not a bad place to lock in. It's still higher and at the best rates, highest price that you've seen in the last couple of months. So it's not a bad place to do it. One other thing I do want to show you. This is an appreciation calculator. I know it's tough out there. You're making offers on homes. They're not always coming in, and you want to make sure it's good to stay in the fight. So one, I want to show you the appreciation here in Texas. Year over year is 6%. It's been 7, 8. It's going to be 6 to 7 to 8% here this year. Again, just depending on where you're at. So I'm going to use 6%. Now, historically, Dallas and DFW is only at 3.3%, but that takes over decades. This is just the last few years of this hot market. It is going to settle down, but right now we want to take advantage. So this is something interesting. If you bought a $200,000 home, around $3,500 in closing costs, put 5% down, and we calculated this out for 5 years, you're going to have an appreciation historically of around $235. But over the next 5 years with the appreciation we're seeing, you can see up to $267,000. So if you put that into perspective, the money you're going to make is between $30,000 and $64,000 over the next 5 years, and the return on investment is absolutely enormous. You can't get this anywhere in the market because, remember, appreciation doesn't go off the money you put in, which is the $3,500 in this case. It is the total return on the value of the property. So 85% 1 year, 212, it goes up to 641% return. It is ridiculous return. So I know it's tough out there. I know you're making a lot of offers. Stay with it. Stay in the fight. This is a great time to make money, to get the home you really want. We're here to help. Call us if you need us. Have a wonderful weekend and week, and we'll talk to you soon.